Now, last we spoke, you had about, I think it was your portfolio that you're referring to, your personal portfolio that's now almost all crypto, was 25% in gold at that time. And then, as of, I think it was like November 29th, you fired up that tweet. I'm selling my gold. I'm moving 98% of my investable assets into crypto. And again, tons has changed just since November 29th. So can you update us on where you stand today? And are you making any plans to diversify in the near term, or are you comfortable with that right now? And I guess I'm asking on the back of a 400% price appreciation in Bitcoin since then.
It's done pretty well. But compared to prior cycles, it should go a lot further. But all prior cycles have multiple 40%, 30% corrections.
Yes.
I think it probably goes higher before we get the correction. So Bitcoin might get a 50,000. There's even an outside chance that we go up to 100,000 by mid-Feb and then correct 40%. I don't know. My way of playing that is I'm all in. I'm not expecting to close any positions until the end of the year, maybe into next year. So I will just, if I get any more cash, I will just buy a dip. And I'll be tilting it more towards Ethereum than Bitcoin. I'm currently 80-20. Add to Ethereum because I think it's going to outperform in this cycle.
Yeah, okay, that helps answer a question for me. And, when I see an asset class appreciate 400% in a year, we've all seen 1,000 charts that look like that, and 99% of them end the same way, with some kind of a correction, right? Obviously, it's incredibly tempting to take some profits and take cash off the table. I've exercised restraint, again, based off the conversation, actually not that we had last spring, but just commentary I've heard you talking about your strategy. You're not trying to trade it. You're like, I'm not losing sleep over this, right? I have enough confidence in the long-term basis.
Put it this way. So it's now at 40,000 as we speak. If it had a 50% crash, it's still at 20,000, which is still higher than any of us got in at.
Right.
So, it was there like a month ago at 20,000.
Yeah.
So put it in perspective.
Yes.
It looks horrible when you see a P&L go down, but it's okay. And if you can then add more for the next run up, because these crypto cycles tend to be much longer and much sharper than we used to in traditional markets. So that's okay. I think the chances are it goes somewhere between 200,000 and 300,000 by, Feb, March next year.
Okay. Now, you briefly mentioned there, you're looking at Ethereum. You were weighted 80-20 BTC to Ethereum. And are you expecting that to change in 2021?
Yeah, I'm hoping to add to Ethereum soon. And I will probably continue to add to that, because if I look at the chart of Ethereum versus Bitcoin, it looks like it's basing. Usually, Ethereum is also very much following the 2017 Bitcoin cycle, both in price, in number of wallet addresses, in market cap. It's identical. It's kind of spooky, which tells you this is being driven by Metcalfe's law and adoption effects than almost anything else. So if that's the case, then we know Ethereum has a decent chance of getting to 20,000, considering right now it's at 11,800. 1,180. Holy shit. That's a value proposition. Even with Bitcoin going to 200,000 to 300,000, one's 8x, one's 16x from here.
Yes. Okay. Now you said hoping to add soon. So walk me through your decision-making process there, if you could.
No decision, it's cash. I'm all in, right? As soon as I get some extra cash, I'll put it in.
Got it. So,
okay. That's how I'm dealing with this is, and I'm hoping I get a dip, but if not, I'll still buy it because I'm not worried about the 50% correction.
Okay. Okay. Very cool. Now, okay. I want to pivot a little bit.
So just to clear, why am I not worried about the 50% correction? I've got no leverage in the trade.
Yeah.
I know what I can stand to lose. It's not, I'm an all-in, this is my whole life is riding on this. It's not.
Yeah.
This is a very significant bet for me, but taken from a calculated risk perspective.
Very important to understand. Thank you for expanding on that and clarifying that. Okay. I want to jump into another theme I've heard you cover, which is essentially the end of the US dollar bull market and the emergence of emerging economies. And a quote that I just loved, I believe you tweeted it, was maybe the best strategy for investors, this is not verbatim, is to buy emerging markets and go to the beach. So walk me through that thought process and what does that mean?
So firstly, let me just give you a path. I think there's a correction coming, as we talked about at the beginning. I think it'll hit emerging markets too. The dollar goes up, emerging markets are going to get smoked.
Everything does, yeah.
Everything does. But in the end of this process, the dollar is either likely to break lower over time. I think it goes higher first, but over time breaks lower. Or my actual hunch is it trades in a sideways range, which is miserable for FX traders, amazing for emerging markets. Stable US dollar is beautiful. So if I look at the chart of the EEM, there's a simple ETF that you can trade. Look at the monthly chart of that, or the underlying MSCI Emerging Markets Index. And it's just a massive wedge pattern. I mean, it's a thing of beauty. And it looks like you've got, most of these emerging market cycles tend to give 400% upsides. That's huge. And that's how it always plays out. So we are almost record undervaluation of emerging markets versus developed markets. We're the largest outperformance of the S&P in history against emerging markets. We are set up for a hell of an opportunity. And if the dollar stabilizes for any period of time and there's some global recovery, which obviously will be coming, these countries have less debts, less aging demographics, less problems, more outperformance. So it is generally a 7 to 10 year cycle. So you can buy emerging markets and go to the beach.
And how do you play that market? What are the options available to investors, Raoul?
So how you asset allocate is 3 buckets: liquidity preference, time preference, risk preference. So liquidity preference, you want the thing that's liquid that you can get in and out of when you start the trade, when you don't know it's confirmed, because you want to be able to get in and out quick, right? You'll do the same in crypto. It's Bitcoin or nothing at that point. Then you start setting your time preference. Okay, I feel like I'm on the trend and I've captured what I think is the start of a larger move. So therefore, I'm willing to hold longer holding periods. I'm an all-in, this is my whole life is riding on this. It's not.
Yeah.
This is a very significant bet for me, but taken from a calculated risk perspective.